Hey, it's Matt with PriceActionTradingSystem.com, and it is Tuesday, and it's March 16th. This will be our chart lesson for the day. A couple of things real quickly before I go to the chart lesson. Um, I use CQG, and if any of you did, there was some kind of issue today. Luckily, I was not trading. I didn't notice anything in the morning when I took a couple of trades, so I guess it happened while I was out. I came in and found an email first from a member asking if I'd had any issues, but I hadn't noticed anything while I was trading. But when I went to check my email, as I continued to check my email, there was something from our broker saying that there definitely was a problem with CQG order processing today. So they said they would send something out when it was resolved, and as of now, about 4:30, I've received nothing. So I'm assuming maybe there's still an issue. My chart seems to be printing fine. I went ahead and did a chart lesson. I don't see any issues with it. I think it has something to do with the order processing. So if you're using CQG and you haven't heard anything about the issue, I would hold. Probably most of you wouldn't be trading this time of day anyway, but you might not trade until you hear something, until we hear something back. So, and I did just check my email again, and I haven't seen any new responses. So I'm not sure. They must still be working on it as of this point in time. So um, I wouldn't risk trying to take any trades right now. One other thing, I wanted to show you our news guard quit working yesterday. I guess we pull the custom news guard that we use pulls the information from Forex Factory, I believe, and about every 2 or 3 years they'll change their link or something. I guess they update their website or move things around, and that indicator will stop working. And I guess the last couple of days, maybe yesterday or the day before, they must have changed something because the indicator quit working. So we have the updated one. I've put it back up on the site if you like that one. But one of our members sent me a alternative to try, and you can see it right here. I like this. It gives a little more details. It shows the forecast, what the previous was, and it gives the time, it gives the date. This number's the date. You can, there's a lot of customization you can do to this one. Of course, I take everything off except for the high and medium volatility US items only. And these were the two that came out today, this morning. And I like this. It's kind of up here. It's kind of out of the way. It's easy to see. And it does give you a little bit more information. So, and I put that one up on the site too. It's only available if you're a member of our premium membership, but if you are, you can download it for free. So just go take a look, and you can download either one of them. If you like the old News Guard, I'm not sure. I don't believe this one actually has a alarm either. We did fix the crazy alarm on the other one that went off every 15 times 30 minutes prior or whatever. We did fix that. So you should be able to download the old one if you want, and you shouldn't have that problem anymore with all the alarms going off. But this one I do not believe has an alarm. I just installed it late this morning, and so, but I don't think it has an alarm. So it just puts the news items up there, and I guess they stay for the day. Tomorrow it should update it or whatever. We'll see. But anyway, let's get to the chart lesson real quick. Really, this is another range day. I don't have the bigger range on there. Really, all I played the two trends up. We had the blue one, and then it kind of fell over to the yellow one. And maybe the yellow one's, I mean, I know the yellow one's valid, but maybe we really had the break of the blue one in two legs up, and we reversed. And we had the break of the yellow one, and prices tried to go back, but they never could. We ended up with two legs down. So the yellow one really never played out, or maybe I just don't have it drawn right. Originally, I drew it a little different, and I came back and changed it. But I'm guessing that maybe it was more like this, and we did get a break. Actually, I'm having a hard time drawing this. I drew it out. Actually, I drew it off of the, originally off the highs. I think I drew it like this. If you draw it like that, we actually get this overshoot and then it reverses. So maybe I originally had it right to begin with. That's how I originally drew it. But then when we bounced early here a couple of times, I came back and changed it to like so, and I felt pretty confident that was correct. But anyway, it is what it is. And so I don't know if I had it right the first time or if that's right and we just reversed. And maybe the yellow one's not valid at all. We just had the blue one that gets the break and the two legs up. Either way, it doesn't really matter. It doesn't change anything as far as the trades go. So you could leave it or take it. And if you take it off, you still see we had the break and a couple of legs up right there. And then the market reversed. And so really, again, we just have a range day. So let's put this on here, just so you can see the bigger picture. And that's how I would have drawn it. And you can see the midline coming into play there. And when we broke lower, I would have just looked for a measured move on these two legs. And you might have measured this leg. I actually originally measured this one too. Here to here, and then from here to here. And you see we pretty much had a perfect measured move on that one too. But it just, actually that one was to here. We actually overshot that. So, yeah. This was the more perfect measured leg. When you measured this one, as you see, this one gives you this leg here. And that's basically a perfect measured move. So that was the more accurate way to get it. But you can see the range there. Back out a little more. We really spent the whole day in that range. We had a little failed break lower, and then we reversed. So we didn't really get a good reversal here. This was just a little too bearish to trust that on a failed second entry short, in my opinion, because we did come up here and bounce off that. We should have seen a pullback sooner here that gave you a better entry than that. So you'll notice no reversal trades to the upside on that. But let's back out. We'll talk about the trades. Let me zoom or pull in. Let me zoom in. And we'll talk about the trades here. So 7 o'clock came right up through here, and then we pulled back, and we just started going somewhat sideways here. But notice we made that low, and then we came back. We tested it once. We really tested it twice, so there was a little double test there. But that looks so congestive. There's no rejection right there, and we're not back to the trend line. So I held. But when we came back again right here and made that higher low, now you got a failed second entry short, and so a break above that's probably going to send you back to the highs. So I felt like that was worth taking as a long entry right there. But we ended up just staying in this range. There's another possibility here. Again, I was a little bit afraid of this. When you could argue for this to be green, there's just no rejection there. Notice how there's 1, 2, 3, 4 bars, but none of them really touch the trend line till this one. So it's one that you might take. I didn't mark it. You could argue for it to be green. I wasn't sure if the trend line was really in play yet, but when we came back again here and it bounces off of it, then you got to pay more attention to it. It looks valid. The midline looks valid, but I just was a little, without all those bars stacking up there, I was a little bit leery of it. But notice what happens. You get another first entry short and another second entry short, plus you get a second entry long. New swing high, first entry, second entry. The signal bar is not perfect. It's not a horrible signal bar, but it's not perfect. But the fact that it's a failed second entry short, you can take it. and it pretty much by this point, this trend line is well confirmed, so I like that one. And it took a really all you're looking for is a scalp here. I don't know if I'd even try to hold on to a runner on a trade like that, but since it's off the key entry point, maybe you do. There's a higher low here, but it's right back into the highs, and you can see they're holding, so I don't think you want to risk a long on that one. Runs up, we come back, and you get another bounce off the key entry point, but it's just a first entry, and there's no break. Look at that short-term trend line. There's no break of it or anything like that, so I was just a little leery of that entry. But notice if you just wait, you come back and you get a first entry, and then you get a second entry. And now that's your first close outside. You're a little ways away from the EMA. A nice bullish bar. So I like that one. There's a higher low right here. This actually breaks lower and reverses and turns up. I like going long on the engulfing bar because it's probably going to trap people. And there's actually a failure here. This one broke lower too and was another engulfing bar. If you traded on the engulfing bar, I'd be okay with that one because it gives you enough room. But if you wait till right here, you don't have a lot of room. So that one's all considered. And I really didn't. It's right off the EMA, but you got this possible trend line right here. So I just wasn't sure about that one going right into that resistance of that high. So that's why it's marked the way it is. But if you're just patient, a few minutes later, it comes up again and you get another two-legged pull back to the EMA with a good bar. Now you got a little room to play with there, and it jumps on up. And of course, now you've had your break and a couple of legs up. But I was looking at the possibility of the yellow, but this is mostly flat here. And playing this as a range might have been the better play rather than the yellow one I originally had. So let's just put this on there and look at it. You don't have to have it. I still think you find the same trades either way. There might have been one extra trade in here that you might have taken. That might have lent you to want to take this trade, but still there's no close outside that trend line working down. So I don't think you want to take that until you get this triple test. So anyway, but otherwise it doesn't change anything else much. You still get this triple test. Notice we made that low. You test it once, you test it twice. Plus this is a first entry, second entry. Nice signal ball. We already talked about that. Then you get the higher low right here. We just talked about that one. Then the failure. Now the second entry long. We run up. We make that new high. And then we come back into the possible range. But either way, it was coming off the high of the yellow trend channel that I had. So it depends on how you looked at it. In the end, I really like this one better. Just be honest with you. So just depends on how you saw it. But again, I think you get the same play either way. Doesn't really matter. There is a hidden second entry short here. Notice that low, first entry, second entry. Of course, it doesn't break lower on the true count, but if you went to a smaller chart, you would see it. It's not a failure though, and it is basically a double top, so a lower high. So it's another one you could argue for. I'd want to wait on a lower high most likely, and you don't get one. It just drops straight to the bottom. But then you make that low, you come back and you test it really once, twice. It's just a little bit too congested without much room there. But finally, it's looking like a range now, and you get this with plenty of room to scalp out, and you get that little failed break lower. So we'll probably go back to the EMA at a minimum, and we may go all the way back to the top. It turns out to be a good scalp, and then you get a little triple test across the high. Notice you made that high, you test it once, you test it twice, and that's the midline of the yellow range, but it's also confirms this trend line. And if you just would have drawn it across here and drug it down, you would see it fits, and that's definitely a valid trend channel. So you may not have had that trend line, but you didn't need it. So if you saw the key entry point with the triple test, and it's also could be considered a first entry, second entry. It's really sideways, so and it's not a really good signal bar. So if you're not playing it as a trap, you really can't take that one. So there's a couple different ways to look at that one. I marked it green. You probably just might skip that. But it drops on down, and we work back to the trend line again. Um, this bar is just a little iffy. This is another one you could argue. Um, because it's a breakout the yellow, most of the time those are going to fail. And so I would at least want a lower high and maybe a double test of this. So it comes back here again and tests it and gives you a bearish bar right off that trend line. You got the support resistance of the channel. A couple of different reasons to like that one, and I like that one. And you can see it takes on off that key entry point. You get another lower high, but it's way down here. It's just too far down. And then of course we run down, we bounce, and we run up. There's a second entry here, but when prices only made an inside bar and didn't break lower, that looks too congestive. I would wait a minute. Prices are probably going to come back and be worth a scalp. But with that overshoot, you could get a reversal. So don't risk that entry. Just wait. And you can see we do end up getting a break and two legs to a new high, and then we work down again. So if you're just patient, the price action will show you what to do. Of course, there's a second entry short here, but not a very good signal bar. And we actually try to go higher one more time, and then we finally get a lower high here. I'd count that as a double top, and this is a lower high. And you could look at it as two legs down and a failed second entry long. So you could look at it either way. I marked it green. It's not a perfect reversal pattern by any means. I'm just really looking at that as a lower high off this double top when you're looking for prices to reverse back down to make a new low anyway. And maybe you get that measured leg, which is this leg right here from the first one. Or no, I take that back. That is the first leg down there. The measured leg would have been off this whole thing here. And that would have been, I think it was right along in here. So I'm getting ahead of myself there. Sometimes when you back out, you kind of get lost on this stuff. Oh yeah, we were right here. So I marked that one green. And then we're in another range here. You can see this little range, and you make the high, you test it once, and you come back and you test it again, and you get that little push higher that fails. That's a big bearish bar. I like going short there. It's a little early for the off the trend line, but it doesn't matter because it's just a range going sideways. And honestly, I don't know if it broke lower or higher first. This one would be tempting, but if it broke lower first, you would have probably got stopped out of that, only to see it go exactly where you're thinking. So the only reason I like this one is because how bearish that is. They've obviously got some longs trapped there. And of course we come back and we test that high once, we test it twice, and look, we test the trend line again. You get your close outside of this short-term trend and a new high, and notice that new low you're working up. First entry, working up, and that's a second entry short, right off the key entry point, right off the resistance of the little small time range or short-term range. And this actually breaks higher. It's an engulfing bar. You could have gone short one tick below that. Probably the way I would have traded this was let it break higher and then let it move out the other side and then drop a limit order and see if it'd back up and give you a little more room. Although we've already pushed through these lows, so they've probably already wiped out most of your sell orders down here and buy orders that would be your reversal type stuff, you know. So so there's not as much danger of entering right there when this is your new low and you've already pushed through that support. I'd still have it in my mind, and it would need to be a good setup. This is a really powerful short right here, to be honest. So that's just very bearish off that key entry point. The last two times we broke higher there, we had very bearish moves. So, and you may be looking for that second leg down from this point too. That's the highest point. and we run on down, and then you get another second entry short. The only reason this one is green is because it's off the midline, and we've turned down off that midline a few times, but since we came off here, we had this overshoot. It concerns me a little bit. There is an overshoot right here. Notice how we overshot the yellow channel. So that concerns me a little bit on this 2 legs back. And this is really a first entry by the count because we made a new low. But you can clearly see it looks like 2 legs. And it almost looks like congestion in a failed breakout. But that gives it validity for a short as well. It's just not a high. It's just not, with that overshoot and not being back to the trend line, you got to be a little careful with it. So for that reason, it's green. And you don't want to take this lower high with that huge bar down here at the very lows. And of course, it's not but a few moments till we bounce. It looked like we were going to get a second entry right here, but it doesn't trigger and it moves higher. And you get your second entry up here. This is a second entry short, but this is looking like a legitimate trend, and you have had no break of it yet, so I just don't think you want to take that short. If you had of it, would have worked, and it is a little ways away from the EMA, but I think you need a lower high, which comes right here, and that's after 2, and it doesn't trigger anyway because the prices never break below. So that takes us into 2 o'clock, and that pretty much gives you the day. So really, we traded down from maybe 9 o'clock, shortly after 9 o'clock, all the way into 1 o'clock, close to 2 o'clock. So, but this is again is just a range day with a failed break lower, and then we bounce back up into the range again, or we fell out the low side and trade back into the range, I guess just to say. So the market seems a lot more normal. Several people have commented on how it's like watching paint dry, but this is a very normal ES. Much more normal than, the volatility is slowed down quite a bit. So this feels much more normal. And we're still getting some bigger signal bars, but you're getting some signal bars that give you a chance to follow the 8-tick rule again. And it may get back to the point where the 8-tick rule could become a distinct possibility on most of your trades again. Having traded all this volatility, I don't worry much about that rule, but it's necessary for new traders because you're going to have a lot more losses, and you're not going to be as skilled at reading the chart. And once you're a much more skilled chart reader, you'll understand what I'm saying. I know that every trading thing you read tells you got to have your risk to reward. Well, sure, if you're a losing trader and you lose more than you win, you got to have risk control. But if you got a winning strategy and you win 7 or 8 times out of 10, you don't have to worry as much about that. It becomes easier to get because we're only scalping for 4 ticks. I've had a couple of traders that can consistently trade at 80 or 90%, and they're not even good chart readers yet. They're okay, but they're way too aggressive, and they still have great trading percentages. So it can be done. Once you understand this chart, it changes everything. Even if you're not that good at picking the entry points and finding the key entry points, if you can read the chart and you really understand what prices are doing, it really makes it so much easier. So I don't want to oversimplify because it's anything but simple. But once you get it, once that light goes off and you start to understand that there's the geometry of price action and the geometry of a chart and just general price movements based on the rules that you read in the manual, they're rules, but they're flexible rules, so you have to understand that. They're not written in stone, but if you follow the rules, it'll keep you on the right side of the trade 90% of the time or better. And so that's the whole idea. We're just putting the odds in our favor. We're not gambling. We're not doing like the average trader, just throwing darts at a board and hoping they work, because that's what most traders do. They don't have any idea what prices are doing or where they're going. They're just guessing. And if you're guessing, you're not going to last very long because you're gambling. So I didn't mean to get off on a tangent, and this is already 25 minutes, so I'm going to wrap it up. But it will get easier if you know how to read this chart and you understand the basic rules of, the basic laws of a chart. I call it the law of charts. And it's just, and it doesn't matter what chart you go look at, you'll see the same type movements and the same price action. It works in any market, any time frame, and you can pull out any chart and take all the headings off, and you can't tell one chart from another, and you'll see the exact same things happening. And so study those charts and you'll see it. Don't take my word for it. Go study the charts until you see it. It's there. So I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.